Hello, friends. Welcome to another webinar today. I'm happy that you are taking your time to inform and learn a little bit more about the process of getting your mortgage. As always, this is Andrea Fernandez, your loan officer. And today, the subject is pretty good, pretty interesting, and I'm sure you have a lot of questions. What is the difference between an FHA loan and a conventional loan? I'm sure by now you've been hearing a lot about these terms, and you're like, well, which one is better? Which one am I supposed to pick? So I'm going to go over a little bit of the main difference. And at the end, you're going to be able to determine, obviously, with the help of your loan officer, what will be the most beneficial loan for you at this moment. Okay, so one of the major difference between these programs is that they're sponsored by different entities. Okay, so who sponsors the FHA loans? The FHA loans are sponsored by the government, which means that in case that you ever default on your loan, then the government is going to go ahead and pay the bank for the default. For the conventional loans, it works a little bit different. They're actually private entities and they are purchased by investors most of the time. So in case that you ever default on your loan, then they are covered by what they're called private mortgage insurance, okay? And we'll have another video talking a little bit about mortgage insurance, as this is a little bit more complicated subject, so I don't want to be confusing everybody. But you're interested and want to learn more about it, please click on the video regarding mortgage insurance. So what is the FICO that I need to have for these programs, right? For the FHA loans, it's actually a little bit easier to qualify if you have a low score. You can actually get a loan for a FICO 580. Of course, there's going to be other requirements if your score is between 580 and 600, and it all depends with the lender that you're using, okay? But technically, you can get an FHA loan with a score of 580, okay? With a conventional, it's going to be a little bit harder, okay? You are going to need a better FICO score. Technically, you can get a conventional loan with a FICO score of 640 and up. Of course, the better your FICO is, the better is the rate you're going to receive. So if you're in one of those people that have 640 and may be qualified for a conventional loan, the FHA loan might be a better option for you because you're going to have a really high rate if your score is between 640. Of course, if your score is 700 and up, most likely the conventional loan could be a better option for you. But it's very important to talk to your loan officer so she can give you the options at that point, okay? How much is my down payment? Okay, so pretty good question. And I'm gonna show you my screen here. If you have an FHA loan, you only need 3.5%, okay? That's it, 3.5%. This, of course, if we're trying to buy a property that is $200,000, okay? So FHA loan, you only need 3.5%. In this sample will be $7,000. For a conventional loan, the conventional product has a very good down payment program. Or not down payment, they have a program called Home is Possible or Home Ready. And you only need the 3% down. But not everybody qualifies for this program, okay? So let's say if you're here in Las Vegas, you cannot be making more than $56,640 a year in order for you to qualify for that program. Of course, everybody that is in the loan has to make less than $56,000 combined, okay? So if I make 40 and my spouse makes another 40, we will no longer qualify for this program, okay? So this is only if you qualify for that. So if you are able to qualify, the conventional may be a better option in that case because they're only asking you for 3% down payment, okay? But if for any reason you no longer qualify for the program because you make too much money or for any other reason because you're not first-time home buyer, then you will need to bring 5%. 5% of $200,000 in this sample would be $10,000. So in this case, if you have to bring 5% down in the conventional, then the FHA might be a better option for you because you only need to bring 7. So you're saving right there $3,000, okay? One other major difference between the conventional loan and the FHA is which one offers me a better interest rate? Okay. This is a question that most people ask. It's like, hey, are the interest rates the same for conventional FHA or is it better in one or the other? So the answer is that the FHA loan is always going to have a better rate than a conventional loan. Okay. There's a few reasons for that. That doesn't mean that the FHA loan is always going to have a lower payment because we have to talk about the mortgage insurance. And like I said, this is a subject that we're going to leave for another video. But that could make a difference between the total amount of payment that you're making in a conventional loan or an FHA. But in general, the FHA loan is going to have a much lower rate than a conventional loan. Okay. Do I have to be first-time home buyer to qualify for any of those programs? So for the FHA loan, you don't have to be first-time home buyer, but there's a big but on this one. You cannot have more than one FHA loan at the same time. For example, if I purchase my home today and I got an FHA loan, and then a year later I want to buy another home, I cannot qualify for the second home as with an FHA loan. I have to get a conventional in that case. But if I buy my house and I sell it, I can qualify for an FHA loan. Okay, I just cannot have two FHA loans at the same time. There's a few exceptions. One of the exceptions where I can have two FHA loans is, for example, if I buy a home in Nevada and then I move to California, then I can have two FHA loans because they're in different states. But I cannot have two FHA loans living in the same city. Okay. Instead, with a conventional, you don't have to be a first-time home buyer. You can actually own several properties and have finance several properties. They're actually very lenient in that regards. So in that case, the conventional loan will be a better option for you. Okay. And obviously, as I explained to you before, you don't have to be a first-time home buyer, but if you want to qualify for the special program, Home Ready or Home Possible, then you will need to be first-time home buyer. Okay. Okay, another question that I get all the time is which one will qualify me for more money? Okay, and it's very simple. Actually, the FHA loan will help you qualify for more money than the conventional loans. The reason is simple. The FHA loan they would allow us to own a little bit more debt, okay, than the conventional loan. Just to give you an example, and then we'll talk about it in another video, what DTI means. You know, what does that mean? That's a term that you're going to be hearing a lot. But just to give you an idea, with FHA loans, your DTI can go up to 50%, meaning what you earn divided by all your debts cannot be more than 57%, okay? In a conventional loan, they restrict us a lot more with that number. They restrict us to 45 to 50%, okay? So we're super limited in that sense. So if you're trying to qualify for the most money, or if you actually owe a lot of money, then maybe the FHA loan will be a better option for you, okay? Oh, this is a good one. For all of you that are married, do you have to include your spouse on the loan? This is a great question. It's a little confusing, okay? For your FHA loan, you don't have to include your spouse, but you do have to add all the debt that your spouse has, okay? So, for example, if I don't have any debt and I apply for an FHA loan and my husband has car payments and credit cards and student loans, they have to include all those payments into my qualification for a home. So if your spouse has a lot of debt, then that may affect the qualification, and I may have to, you know, if I was qualified for 250, maybe with his debt, I only qualify for 200,000, right? So that's gonna limit me a little bit. Obviously, it all depends on what kind of spouse you have, right? So if your spouse maybe doesn't have any debt, so that may not have any impact on your qualification. Instead, when we're talking about the conventional loans, even if I'm married, I can apply by myself and it's only what's on my credit. It doesn't matter if my husband has 10 cars on his credit, that's not going to affect my qualification because it's only going to be based on my numbers, on my debt. Okay. So that's another thing. In this case, I wouldn't be able to tell you what's better. It's all depending on your current situation. Okay. So the main difference between FHA loans and conventional is the mortgage insurance. Okay, so for the FHA loan, they're gonna charge you an upfront mortgage insurance fee of 1.75% of the loan amount. Okay, so you don't have to bring it out of the packet, but they're gonna be charging you and they're gonna add it to your loan amount. Okay, and I'm gonna be explaining that, like I said, in another video. And also, you're gonna have to pay 0.85% yearly of the loan amount on mortgage insurance. And of course, they divide this payment monthly, but when you do the calculation of 0.85%, that's actually an annual amount, okay? In the conventional loan, you're also going to have a private mortgage insurance, but the amount that you're going to be paying is all going to be depending on how much money you're putting down and what is your FICO score. So if you have a good FICO score, maybe you give you 5%, 10%, 15%, your mortgage insurance premium is going to go down. Instead for FHA loan is not necessarily that case. You're always going to have mortgage insurance. And if you're able to give 20% down payment, you're not going to have any mortgage insurance at all. So that's a really good advantage of having a conventional loan. In the case that you have the money for down payment, obviously, I would recommend you to go with conventional because if you give 20%, you're not going to have to pay mortgage insurance. Okay? Another advantage that the conventional loan has versus the FHA is that once your property has at least 22% equity, okay? So 78% LTV on your property, the bank is going to remove that mortgage insurance payment. Okay, that's obviously going to take probably a few years for most of you. But with the FHA loan, you're never going to be able to remove that mortgage insurance payment. The only way you're able to remove the mortgage insurance payment is if you sell your home or if you refinance for a conventional loan. Okay, so that's definitely the major difference between these two programs. Obviously, if maybe you have bad credit or your credit is not very strong, I shouldn't say bad, if your credit is not very strong, then I would probably recommend you start with an FHA loan, and eventually once you have some equity in your house, go ahead and refinance for a conventional loan. Because otherwise your rate is going to be super high if you go with a conventional loan and don't have a really strong score. And when I refer to a strong score, I would probably talk about 700 and up, okay? So if you're in the 600s, honestly, most likely the FHA loan is going to be more beneficial, okay? Also, the 78% rule is only if you don't do anything. If you never refinance, the bank has to remove the mortgage insurance by law. But let's say you already at 80% and you want to refinance and maybe take advantage of great rates. Let's say right now rates are really low. Then you can actually refinance, and at 80% you can remove that mortgage insurance, okay? Only by refinancing. So which one is better, Andrea? This is the million dollar question. Which program is really better? As we went step by step of the major difference, there's really no better program, right? I personally like the conventional a little bit better just because you can get rid of the mortgage insurance, in 5-4 years whenever you have equity. So it's a great advantage. But it really all depends on your situation. So I wouldn't tell you that the conventional loan is the best loan and that's the loan that you must go for. It's really depending, what's your score, how much money you want to give a down payment, if you're married, things like that. So there's really no black and white answer here. But if you have any more questions, of course, let's schedule a meeting or talk to you loan officer, and they will be able to answer any concerns you have. So it's very important for you to start understanding these terms or seeing what the options are available for you so you can make educated decisions when it comes to buying a home. Okay, my friends, it's a pleasure. And if you're more interested about this subject, please go ahead and watch the mortgage insurance video that I'm going to be posting. Bye bye.